Dear students, in today's class you are going to learn how to prepare partners capital accounts under fluctuating capital method. I have already written a problem here on the board. Just we will go through what is given here. After that we can prepare the necessary accounts in the books of partnership form. Okay, let us see what is given in the problem. Aman, Suman and Biman are partners in a firm sharing profits and losses in the ratio of 2 is to 2 is to 1. Very simple thing is there. Three partners, namely Aman, Suman and Biman, they have formed a partnership and agreed to share the profits in the ratio of 2 is to 2 is to 1. Who contributed as their capitals 40,000, 40,000 and 20,000. This is about their investment. Aman is entitled to get a salary of rupees 1000 per month and a commission of rupees 3000. See here the salary per month decided by the partnership firm to give to whom? To Mr. Aman. It comes to rupees 12,000. This is an item of income to Mr. Aman. That is why that amount is credited to Aman's capital account and the same amount of salary is debited to profit and loss appropriation account. Next one is he is also entitled to get a commission of rupees 3000. This is also an item of income to whom? To that partner. Hence, Aman's capital account is credited again with the amount of rupees 3000 and profit and loss appropriation account is to be debited. It was agreed to charge interest on capitals at 5%. 5% rate of interest per annum is to be given to the partners on their investment. Therefore, 5% is to be applied on their investment and we have to calculate how much interest comes for 1 year and the same amount is the item of income to the partners. Hence, that amount is credited to all the partners' capital accounts. Next one is the same amount also debited to the profit and loss appropriation account. Next one is interest on drawings during the year amounted to rupees 1600 and rupees 400 respectively. You should be very careful here. Here this is not the amount of drawings. This is the interest on drawings. Whatever the interest has come, that is given here in the problem. Interest on drawings is the amount which is collected from the partners by a partnership firm. Therefore, it is an item of income to the partnership firm. Hence, this amount of income is to be credited to profit and loss appropriation account and debited to all the partners' capital accounts. Next one is a commission of rupees 4000 is to be given to the manager. Therefore, here rupees 4000 is a charge to the profit and loss account that you have to keep in mind. Interest on drawings. Next one is interest on capitals, salary, commission, etc. These are the items which are to be shown in the profit and loss appropriation account. Commission which is to be given to the partners is shown in the profit and loss appropriation account, but the commission of the manager is a charge to the profit and loss account. Hence, it is debited to the profit and loss account. That point you have to keep in mind. Women is entitled to get interest on loan of rupees 1000. Here one of the partners, Mr. Biman, he has given loan to the partnership firm. On that, he is going to receive rupees 1000 as interest. Therefore, here this amount of rupees 1000 is to be charged to the profit and loss account of the partnership firm. Here 4000, that is the commission of the manager. Next one is rupees 1000, that is interest on loan of the partner. These are the items which are to be shown in the profit and loss account. Profit of the firm before making all the above adjustments amounted to rupees 65,000. Here profit of the partnership firm before making all these adjustments is rupees how much? 65,000. It means now we need to make all these necessary adjustments and find out the net profit of the business, and that is distributed to the partners in the ratio of 2 is to 2 is to 1. Very simple thing. Now what we need to do is, here profit before making the adjustments is how much? Rupees 65,000. Try to understand here. Rupees 65,000. And in this, commission of the manager and interest on loan, these are the items which are to be charged to profit and loss account. Therefore, in the profit and loss account, rupees 5,000 is debited and remaining balance of rupees 60,000 is taken to the profit and loss appropriation account. Then again in the profit and loss appropriation account we have to make the adjustments like salary of the partner, next one is commission of the partner, interest on capital, interest on drawings, etc. Then at the end we get the net result of the business that is transferred to partners capital accounts in their agreed ratio. Okay, let us prepare profit and loss appropriation account. Profit and loss appropriation account. Okay, before going to prepare profit and loss appropriation account, what we need to do? We have to adjust two important items which are given here. Okay, we prepare profit and loss account. Okay, now what I told you, 65,000 is the amount of profit before making all the above adjustments. But in this, two more adjustments are there which are to be made through profit and loss account. That is why first I take this one, profit by balance brought down, rupees 65,000. Then to this what I do, I charge commission of manager's commission. Very simple thing is there, try to understand. Manager's commission is how much? Rupees 4,000. Next one is interest on loan is there. Interest on loan to the partner, rupees 1,000. See, when these items are adjusted, whatever the profit remains, that profit is taken to the profit and loss appropriation account. 65,000, and here you write rupees 65,000. What is the differencing figure? Profit and loss appropriation account, rupees 60,000 it comes. This rupees 60,000 now I am going to take in the profit and loss appropriation account. By profit and loss account, what is the amount? Rupees 60,000. Here, whatever the net profit has come here, that profit is to be taken in the profit and loss appropriation account, rupees 60,000. But in the partnership, what we are going to do, we are going to make the remaining adjustments through profit and loss appropriation account. What are the adjustments which are made through this account? First one is a salary of partner, to salary. Whose salary is there? Mr. Aman. Aman's salary. Aman's salary. How much it comes? 1,000 per month means it comes to rupees 12,000. This is to be debited here. Next one is commission of rupees 3,000 is there. Therefore, here to Aman's commission, rupees how much? Rupees 3,000. Try to understand the impact of these entries on the profitability. Now you see, net profit of the business, how much the profit of the business is rupees 60,000 as per the profit and loss account. Now the partnership firm is going to make the payment to Mr. Aman rupees 12,000 as salary and commission of rupees 3,000. Here, what is the impact of this on the profitability? Here the profit of the business, goes down. Here the remaining profit which is to be distributed to the partners will go down. Next one is, it was agreed to charge interest on capital. Whenever interest is given to the partners, that is also debited to profit and loss appropriation account. To interest on capitals, Aman will get 5% of his capital. Next one is Suman will get 5% of his capital. Next one is Biman. 5% you calculate. 5% of how much? 40,000. For here 5% of 40,000 comes to rupees how much? Aman has invested rupees Aman has invested rupees 40,000. Therefore 5% of 40,000 it comes to rupees 2,000. Therefore 2,000 is given as interest on capital to Aman, and again rupees 2,000 is given to Suman, and 1,000 is given to Biman, because in case of Suman again same amount of rupees 40,000 is there. Okay, here Aman's capital and Suman's capital are same. That is why 5% of 40,000 comes to rupees 2,000, 2,000, 2,000. And next one is in case of Biman, he has invested rupees 20,000. 5% of 20,000 comes to rupees 1,000. Therefore, total interest of rupees 5,000 is debited to profit and loss appropriation account. What else you see? Here interest on drawings during the year amounted to rupees 1,600 and 400. Interest on drawings means this is the amount given by the partners to the partnership firm. Therefore, partnership firm's income is recorded on the credit side of profit and loss appropriation account. Interest on drawings. Interest on drawings. How much? Here Aman will pay rupees how much? Rupees 1,000. Next one is Suman will pay rupees, what is the amount? Rupees 600. Next one is Biman will pay rupees 400. It comes to rupees 2,000. 2,000. This is with regard to the interest on drawings. What else? Over. These are the adjustments. Now simple, we have to close the account. On the credit side, rupees 62,000 is there. Now 20,000 is 20,000 is on the debit side. What is the difference in figure? You transfer this one to capital accounts of partners. Capital accounts of partners. What is the difference total amount you check? It comes to rupees 42,000, I think, right? 42,000. This 42,000 is nothing but the profit of the business which is distributed to partners in the ratio of 2:2:1. That is why here Aman, Suman and Biman, they are going to get this profit in their profit sharing ratio. How much it comes? Just you see, 2/5 of 42,000 comes to rupees 580, 540, 240, 8, 16. 16,800 is the share of Aman. Next, same amount is the share of Biman, 16,800. Next one is this fellow will get, Mr. Biman will get rupees how much? 8,400. 8,400. This is the way how we have to prepare profit and loss appropriation account. Very simple thing is there. Then after this, we prepare partners capital accounts. Now I rub this. Aman's capital account. Aman's capital account. We are preparing capital accounts under fluctuating capital method. Therefore, all the adjustments are to be made through capital accounts. No need of opening current accounts in the names of partners. Aman. Next one is Suman's capital account. Suman's capital account. In the similar way, we will also prepare Biman's capital account. I will put that one here. Biman's capital account. Okay, in the problem what was given? All the partners had invested some amount towards their capitals. Okay, now we will prepare partners capital accounts. Okay, first thing is we have to enter the investment made by partners. Assume they have brought cash into the business. Therefore, by cash account 40,000. In case of Suman also investment is same, by cash account rupees 40,000. And Mr. Biman has invested rupees how much? Rupees 20,000. Rupees 20,000. This is with regard to their investment. After that, just you see, Mr. Aman is entitled to get the salary and commission. That is the income which is to be shown here on the credit side of Aman's capital account. That is why here commission you write. Commission rupees how much? Rupees 3000. He is also entitled to get the salary. How much? Rupees 12,000. Next, he is also entitled to get interest on capital. Interest on capital rupees 2000. What else? What else? Next one is their share of profit also credited by profit and loss appropriation account. By profit and loss appropriation account, this is the share of profit. This is the share of profit, rupees 16,800. Just to try to understand here, this is the amount invested by Mr. Raman and he is entitled to get the commission of rupees 3000. This is an amount of income, that is why it is credited here. Next one is salary, is also the amount which is to be paid to the partner, hence that amount is also credited. Interest on capital is also income of the partner, hence it is credited. And whatever the profit has remained, rupees 42,000, this profit is distributed in their profit sharing ratio. Therefore, share of Mr. Aman comes to rupees 16,800. Next one is here interest on drawings he has paid. That is why that amount is to be debited. Interest on drawings. Interest on drawings. Rupees how much? Rupees 1,000. Here in this problem, total amount withdrawn by the partner is not given. Therefore, that amount we can't take here. Only interest on drawings is given. That amount I am going to show here, rupees 1,000. Now, his capital account is to be closed. 43, 45, 55, 55, 57, 63, 73,800 it comes. 6 to 8, 10, 13, 1 remains. 3, 7, 73,800. Here you write to balance carried on. 72,800. This is the capital balance of Mr. Aman as per his capital account. Next one is Mr. Suman. He is entitled to get interest on capital, rupees 2000. That is why here I am going to write by interest on capital, rupees 2000. Next one is his share of profit, 16,800 by profit and loss appropriation account. By profit and loss appropriation account, rupees 16,800. Nothing else. Now we have to close his account. 78,800. Here you write 78,000. Is it 78? 6 to 8. No, 58,000. Not 78. Okay, what else? Next one is interest on drawings is there, that we have to show. Two interest on drawings. What is the amount? Here Suman's interest on drawings, rupees 600. Now close the account. Here total comes to 58,800. Here you write 58,800. Remaining balance you write to balance carried on, 58,200. This is the capital balance of Mr. Suman. Come to Biman's capital. Here Mr. Biman is entitled to get what? Interest on capital. By interest on capital, what is the amount? Rupees 1,000. Next one is his share of profit. By profit and loss appropriation account, you write by profit and loss appropriation account. His share of profit is how much? Rupees 8,400. And his drawings on his interest on drawings. Interest on his interest on drawings. What is the amount? Rupees 400. Now close the account. 29,400. Here you write 29,400. Here you write to balance carried on 29,000. 29,000. See, this is the capital balance of Suman, and this is the capital balance of Biman, and this one is the capital balance of Mr. Aman. See, this is the way how we prepare partners' capital accounts under fluctuating capital method. The same amount we have to write on the credit side, like by balance brought down rupees 72,800. Here you write by balance brought down. What is the amount? 58,200. Next one is, here you write by balance brought down. For the next year, this will become the opening capital of that particular partner. This is the way how we have to prepare partners capital accounts under fluctuating capital method. Why it is called as fluctuating capital? Because whatever the amount the partners had invested, only that amount is not recorded in their capital accounts, but also all other adjustments like interest on capital, interest on drawing, salary, commission, etc. are also made through the capital account itself. Because of that reason, the capital balance changes. You see here, Mr. Aman had invested rupees 40,000, but his capital balance has come to rupees 72,800. It has changed. But in case of fixed capital method of accounting, only his investment is recorded, but these adjustments like commission, salary, interest on capital, interest on drawings are made through a separate account, that is called current account. Because of that reason, in case of fixed capital method, the capital balance doesn't change. Only when the what you call additional capital is invested by the partner, that time the capital balance changes. If the capital is permanently withdrawn by the partner, that time capital balance changes. In case if there is no additional capital or the withdrawal of the capital by the partner, the capital balance remains same under fixed capital method, but all the adjustments are made through current account. But here, in case of fluctuating capital method, as the name itself indicates, the capital fluctuates, it changes, it won't remain same, because we are going to make all the other entries not in a separate account but in the capital account itself. That is why here the capital balance changes. You see, Suman, so capital balance, the capital amount, capital invested by Suman was 40,000, but now it has changed to 58,200. Next one is Biman's capital was 20,000, that has changed now to 29,000. Therefore, this method is called as fluctuating capital method. I hope you understood the concept. If any doubt is there, you send the comments, and better you share this video even to your friends so that they can also get the benefit of this. Okay, thank you.